Alright guys, welcome back to another live stream. I want to have a quick chat today about some of the stuff we've been seeing in the market. Obviously it's been a very significant week. We saw the Nasdaq decline over 2% in a single day, something that hasn't really happened in almost a year. Of course, we also got PC and GDP data. And just generally, of course, we've seen a big retracement, especially in those big tech names. So let's go ahead and talk about what's been happening and why. And then I also want to talk a little about earnings, specifically Tesla, which reported earnings, Google as well. But going to be focusing a little bit on Tesla because, obviously that's a stock that you guys know that I like to track. So starting first with some of the data releases we got yesterday. Now, the PC did come in a little bit above expectations. We can see here 0.2% month-on-month increase. So it did increase from last month. However, I think overall the trend is still pretty clearly down. We have seen service inflation, I believe, is still trending down. So that's a good thing. And I think one of the things that's really keeping this up is housing, which as we know, is kind of lagging. So, this could be overestimating inflation to an extent. So I would say that this inflation narrative is still kind of intact. And in fact, we didn't see markets, sell off on this news. And we didn't see much of a repricing either of any of the the interest rate curves, right? So to that extent, again, I don't think this changes much, even though it was slightly above consensus. The other one is the other release we saw is GDP, which continues to grow at a healthy clip here. We saw this go up 2.8% in the second quarter. Okay, actually slightly above expectations, I believe. So economy remaining pretty strong, disinflation coming down, and ultimately kind of the right scenario for what we would call Goldilocks, especially in the face of the coming Fed tightening. So with that said, what has been happening this week? Why have we seen this big sell-off in the Nasdaq? As we can see, we topped out here around the 10th of July, and we've been selling off since then. Pretty substantial sell-off. I mean, we can see here we've sold off, let's see, okay, over 10% already, and now we have seen a bit of a bounce since. So good rebound on Thursday. But a couple interesting things to point out, obviously, and something that you're probably aware of by now, is that we've seen basically a very strong divergence between the Nasdaq, those big tech stocks, and the Russell, right? So we're actually seeing the Russell, the IWM, those small caps really begin to outperform. So first issue here is, now, does this seem congruent with the idea that this is a larger sell-off? Not really. So we're not really seeing indexes all fall together. We've also seen Bitcoin hold up really well despite this big sell-off. Bitcoin did sell off a little bit before, but obviously it's held up really well. So already this divergence is telling us that this isn't kind of basically markets kind of repricing interest rates or repricing a recession or anything like that. Okay, it's more, in my opinion, something of basically an unwinding of a trade that was getting a bit too heavy, right? So with that said, we can also see this if we look, for example, at the sector performance. Right now, despite, of course, technology stocks being down so much, over the last week we've seen a lot of sectors up, like utilities, healthcare. Even over the last month, okay, while technology is down 3%, real estate up 8.33%. You will know those if you do subscribe to my macro newsletter on Substack. I did actually talk about real estate being a key, being a good time to buy into real estate. I'm pretty sure we did add some real estate exposure to our macro ETF portfolio a couple of weeks ago. So definitely decent timing there. We did also make some moves in the last couple of days, but anyway, if you guys want to check that out, you can always go follow me on Substack. So to that extent, what has been happening, right? So the sell-off has been more concentrated on those tech stocks. So a couple of things going on here, I would say. First off, I think there's a big situation here of positions unwinding, right? And options, options markets are becoming more and more important because the volume of basically the volume that options markets move every day is becoming a lot more significant. So a lot of the time when you see these big moves, it can have a lot to do with options unwinding or people having to cover their positions. And to this extent, what we've seen now, again, I'm not a complete expert on options, right? I still have quite a bit to learn on them, but what we have seen is basically, in my opinion, an unwinding of a trade that has been going on, right? A dispersion trade, right? So if we actually look, for example, at the why isn't this image here? Anyway, if we look at the correlation index, right, the implied correlation index, we can see that it really has really spiked in the last so we can see here that it really spiked up, right? Now, what is this implied correlation index? So what this is measuring is basically the difference in the correlation between the main index, such as the S&P 500, and the underlying stocks. So we've actually seen in the last few months, years even, is basically this correlation trend down. This means that the S&P, basically the index has become less volatile, while we've seen some very high volatility in certain names, especially those large cap stocks that really carry a lot of the weight of the S&P, right? So we've seen big moves. For example, we've seen, especially towards earnings, obviously Nvidia moving a lot, Meta. We've seen these crazy moves where market caps change valuations in the billions, and what this does is actually it creates this kind of weird situation where you have underlying stocks like Nvidia, Tesla, all those big tech stocks, really like jumping 10-20%, and then you see, for example, the S&P just grinding up higher, right? And that's also why we know that there's been a big divergence in, obviously, the certain stocks in the S&P 500 and others, right? So what we're seeing is these stocks kind of jump around a lot, move up a lot in the last year, especially these big tech names, while the S&P just grinds higher, and therefore kind of this correlation, this volatility is kind of breaking down, right? The S&P has very low volatility, while these other names have higher volatility. Now, in my opinion, this has led to kind of an arbitrage of this volatility, right, through what is called a dispersion trade. Okay, so basically, what we have here is that there's been a trade going on which involves arbitraging the volatility between the S&P 500 and its underlying stocks. This has been done by longing the individual names while shorting the index, okay? So you long the individual names and then short the index. So this, of course, helps basically push up those individual names while maybe, of course, capping the gains in other stocks in the S&P 500. Now, however, I believe that obviously this stock became overcrowded, and now this is beginning to unwind, as we can see basically from the implied volatility, which is spiked up, right? This implied correlation, meaning that we are seeing that volatility go back to the S&P 500, and we're seeing those big names really begin to fall. Of course, if we look, for example, at Nvidia, of course, one of the darlings of the Nasdaq over the last few months. I mean, we can see that this has come down even more than the index itself, right? It's become it's really underperformed here, okay, down about, that's the other way around. So this Nvidia, for example, down, close to 20% since its peak. Okay, so again, very significant move. So that is, on the one hand, something that's been happening. Now, another possible explanation that people have been looking at is this idea of the US dollar and the yen carry trade, right? And how this has been unwinding, right? So if we look, for example, here at the dollar, this is the Japanese yen. Okay, so obviously, now the carry trade has been happening for a long time, as we all know. It's been a part of the global macro for the last few years. This idea that you can borrow the yen short, or you can borrow yen, so short the yen, and invest in US equities, right? Take advantage of that differential because of the low yields in Japanese bonds, and also the fact that the yen keeps depreciating. Now, what we actually saw in the last week is this kind of, again, probably to this extent, kind of an unwinding of positions where, once that support breaks, let's say that, kind of you need to investors start covering, so that accelerates sell-off, something that happened, I think, also with the NASDAQ. And basically, we saw the yen really strengthen, in fact, against the US dollar and also many other major currencies. Now, a lot of this also has to do with the fact that the Bank of Japan is perhaps looking at raising rates. We'll see about this. Now, so the idea is that they're going to start tightening, reduce their asset purchases. I'm not really sure how they're going to do this with a 263% or whatever it is, GDP, debt to GDP ratio, but we'll see again. So I do think there's been an unwinding of this trade, but again, I don't think this is significant. I think both of these will be short-lived, and ultimately I do see here an opportunity to buy the dip, right? To that extent, like I said, this isn't really something that is going to affect markets long-term. Now, I know a lot of people want to talk about the fact that the US could start getting to a recession. We don't really have enough data to support that at the moment. Like we just said, GDP came in strong, right? We have the unemployment rate. Okay, yes, this has been creeping up, but still at historical lows. Definitely not enough to basically warrant a kind of negative loop where income kind of begins to really fall because of that high unemployment. Now, obviously, it is accurate to say that once the trend is established, that this is likely to continue. So a lot of people are saying, well, obviously, once unemployment starts trending up, it keeps happening until we hit a recession. Yes, but it's still definitely very, very early days here. And like I said, there's not enough evidence to support this either, right? And basically, the bottom line being that, as I've mentioned many times before, the consumer is still very strong, okay? Obviously, after all that stimulus that we got in COVID, this really strengthened the balance sheets of consumers and companies alike, right? So, we had consumers and companies really lock in low interest rates for the long term, and overall really increase their asset base, and basically, therefore, the amount of assets relative to their obligations, as we can see, for example, in this chart, which I think is very telling, is actually quite low, right? So here we can see US financial obligations as a percentage of personal disposable income. So as you can see, this is actually really low, right? So actually, the US consumer isn't actually under that much stress right now, okay? So, I don't really see big risk of default. Then we also see corporate profits continue to go higher, right? Even in 2024. Now, there's an argument to be made, of course, that we are seeing there's some conflicting data in terms of, and it's definitely true that there's been a kind of separation, right? So you could argue big corporations making more profits, and to another extent, I think there's also data that shows that while the average US citizen is doing well, there's definitely a big gap occurring between those kind of lower income households and the higher income households. So that is definitely true, but ultimately, again, not enough evidence in the face of, like I said, this growing GDP and the strength of both corporations and the US consumer. But of course, everyone is still very concerned about a possible recession, and that is basically comes down to this, right? And of course, the yield curve inversion, which always has very accurately predicted a recession before. You can see it happen here back in 2008. We can see it happen here in 2001, and here in anyway, all the way back to many recessions prior. Now, is this going to happen this time? Of course, it's impossible to predict with 100% certainty. There's just isn't enough evidence, and there is an argument to be made that, again, things are different here, right? The amount of fiscal stimulus that we saw through COVID, and to an extent, and monetary stimulus, and to an extent, the amount of fiscal stimulus that we're still seeing, is kind of preventing this from happening. So, I don't think that necessarily this time we're going to get a recession, and even if we did, I don't think it's going to happen anytime within the next two quarters, I would say. Okay. Now the market could start pricing in a recession sooner, but again, this is all very dependent on the data, and we don't have enough data to support this case at the moment, right? And on the other hand, we have to bear in mind that liquidity is still looking pretty good. Of course, we have that Treasury General account, which has been filled up and is now going to be released into the economy, as we can see here. So we have about 800, what's that, billion? What's that, trillion? So 800 billion is it going to flow into the economy? Definitely, we'll definitely see this kind of spending, go down as we approach that, that election, controversial elections. Well, every election is controversial these days, isn't it? So that's on the one hand. As you know, I had Michael Howell on, and we talked a lot about liquidity, and ultimately his biggest concern was China. That China wasn't really adding the liquidity that we needed yet. This has actually changed in the last few weeks. So we've actually seen Beijing surprise investors and analysts by cutting. I believe they cut its 1-year rate. China. So they did. They did cut their rates in a surprise move. Nothing too big yet, I would say, but definitely signaling that the Bank of China is definitely willing to support the economy and add more liquidity. So definitely seeing that confluence. Of course, we've already seen, I believe, the Bank of Canada and the ECB begin to cut. Obviously, US is next. China is going to begin to ease, and again, we pretty much have the perfect cocktail to basically maintain this kind of Goldilocks scenario where growth is still strong, but we're also getting markets adding to liquidity. So really, there is nothing in the way of stocks grinding higher from here, unless, again, obviously, black swan events, anything can happen, but ultimately, nothing too concerning there. Now, so that is in terms of the macro outlook. I hope that is kind of clear. So definitely a dip buying opportunity in my opinion. Next I want to talk a little bit about Tesla. This is one that I recently covered on Seeking Alpha. So I just wanted to quickly review the latest earnings. Now, of course, Tesla did sell off strongly. If we look at the chart, we did get that big sell-off following earnings around here. But as I mentioned in my article, we have seen Tesla rally 50% since it hit these lows at around 140, went all the way to about 260, and pretty much followed the structure that we were expecting. And look at that! Look, it reversed exactly, pretty much at this kind of key trend line here that we can draw here. In fact, this is drawn automatically by TrendSpider. So one of the cool features you can use on TrendSpider here is to automatically kind of look at these different trends. And in any case, we're also pretty much following this kind of impulse that I've also laid out here, this 1, 2, 3, 4, 5, right? So now we're finding support at that 200 EMA, in fact a little bit above, but basically momentum here is pretty bullish, right, with all the EMAs crossing over. And ultimately, I think we should see this kind of retest this, get a little bit higher, and maybe even break around 300. Now, we'd likely see some resistance around that 300 level. Of course, after this whole impulse, we might again retest, let's say, this 200 area is possible. But ultimately, this is basically telling us that the trend is now up. Okay, now, in terms of the earnings, again, a lot of things are going on when you have earnings, right? A lot of, like I said, options play a big role here. So sometimes you see big moves and they don't really make much sense. I mean, Google for sure, had earnings sold off as well, even though it beat. Now, Tesla didn't exactly beat expectations, but nonetheless, I wouldn't say their results were horrible. In fact, my argument here is that the bottom could be in. And when I talk about bottom, I'm not only talking about the stock price, but the idea that revenues could have bottomed and also margins could have bottomed, right? So if we actually look at their results, yes, we were down on a year-on-year basis, still 7%, but as we can see, on a quarter-on-quarter basis, revenues have recovered, right? They've, after really bottoming out in Q1, we've seen them increase again this quarter. Obviously, energy storage was the highlight with a 100% increase in deployment. And we also saw, and of course, services as well, kind of increasing. Now, again, gross margins as well increased actually, right? So after bottoming at 17.4%, we've now seen them come up to 18%. The adjusted EBITDA margin was lower, but again, generally the other margins, again, even though, yes, you look at the year on year, it looks pretty bad, it's come down, right? But if we actually look quarter on quarter, it's looking like the trend has really reversed and Tesla may have bottomed here. Okay, so this is one of the reasons why kind of signaling that this could be the bottom. Of course, Musk talked a lot about AI, and as you know, I like Musk reasonably, at least as an entrepreneur. Obviously, he said some stuff that was really kind of a little bit whack, if you ask me, in this earnings call. I mean, he was very optimistic on what the Optimus can do. I think he was talking about the fact that the Optimus, this quote is quite interesting. He says, I think, talking about the Optimus, I think everyone on Earth is going to 1-1. There's 8 billion people on Earth, so it's 8 billion right there. Okay, so he's definitely very optimistic. Then he also cites the, we're talking about his robo-taxis, event that of course got postponed to October 10th. He does reference ARK Invest's 5 trillion market cap possibility there. Now, again, with Musk, and at least he does admit this himself, he does have a tendency. There's actually also a quote. He says, "It's difficult. Obviously, my predictions on this have been overly optimistic in the past." That's an understatement. If there ever was one, he has always been very optimistic. But nonetheless, I think he's still obviously done very well, and there's some interesting possibilities here. At least to the extent that I do see the robo-taxi as something that obviously with the self-driving technology could offer a lot of value. And it is true that in terms of production, obviously Tesla has that production facility, and arguably it also has a very strong and also it also has technology, right? Simply because it has its programs driven so many miles within the Tesla cars, right? It's been picking up so much data, and it is to that extent a competitive edge, so to speak, in that market, right? And to an extent, and the Optimus, again, very interesting idea as well. Musk has this idea that obviously they're also, again, Tesla does have the productive capacity and history to kind of mass produce these robots, but does that mean that we're going to get it? I mean, again, very bullish, but my point here is that you can kind of speculate on Tesla's AI investments, but with a certain margin of safety. Again, we look at revenues, I think that we've kind of hit the bottom here. We're kind of seeing a trend, it's changing trend, right? EV adoption, it did kind of, peak out a little bit, kind of come down in 2023. It's back up now, okay? So, obviously the EV adoption has been a little bit underwhelming in recent years, but it's picking back up, and obviously I think it will happen eventually. So in terms of revenues, we may not grow loads, but we're seeing very encouraging signs in energy, and service revenues also increasing quickly. Like I mentioned in this article, 25% of Tesla's revenues now come from other sources that are not auto. This will increase, of course, massively with, possibly with the AI initiatives. And so revenues may have bottomed. In terms of margins, we could also be looking at them having bottomed already. We're already seeing a reversal in most measures of profit margin, not except adjusted EBITDA. But mainly, if we look at energy margins, these are already higher than the gross margin that Tesla receives from the margin from selling cars, right? So that's already higher, and again, as this revenue increases, it's gonna obviously weigh in more in total margin, right? With services, now they're still a little bit below, but but they also have been increasing. And again, I think that eventually there's the potential there for the service segment to also bring margins higher. Okay, so again, that makes a lot of sense. And then again, going back to the price, just if we look here, just the trend is definitely up now. Okay, we definitely have momentum helping us to the upside, and basically as long as we remain above this $200 level, I'm not really concerned at all, right? I think that basically the trend is up. I think we're completing this impulse. After that, we may then revisit the $200 level again. It's an important level that we've seen tested a lot. It acted as resistance, then it acted as support, so it's definitely an important area of trade, but it's just a matter of time before this breaks out even higher. Again, especially given this idea that markets are going to continue to go higher. I think earnings generally going to do okay in the next couple of quarters. We're going to see that liquidity and potentially therefore the risk appetite, so to speak, keep increasing. So Tesla definitely could be an interesting winner. So that's all for today, guys. I hope you enjoyed this update. Just wanted to cover a bit of the macro and Tesla earnings. In future, next week we'll also be talking about Google. I want to talk about also had earnings. As you know, one of my favorite stocks out there. A lot of earnings coming out next week. Definitely, could expect some volatility. What's going to happen to the Nasdaq? Well, I do think that we have room to sweep the lows again, in my opinion. Definitely, if we look at the chart. Basically, I'm looking for this to kind of bounce up and then maybe retest that kind of 19,000 area, give us a double bottom. As far down as 18,000, that's where that 200 EMA comes in to offer us some support. So again, this is an area that has been tested before, got tested back here in November. So it's not unthinkable to think that that might happen, but ultimately still pretty bullish, and ultimately still looking for this to head a bit higher in coming weeks and months. As we know, seasonally, August, September haven't been great the last few years, but definitely October, November pretty good, especially ahead of the elections. So ultimately, I remain pretty bullish, and I think this is a dip buying opportunity. I've mentioned before, I've been adding some stocks to my own portfolio, as subscribers know, and overall, that's all I think for today. I hope you guys enjoy this update, and as always, don't forget to subscribe to my Substack. If you want to get my access to my Seeking Alpha, you can also subscribe to Seeking Alpha. If you just subscribe to the Seeking Alpha, you'll get access to all these public articles that I do many of, and of course you get access to just a plethora of different data on companies and everything. So it's definitely a great source of value. I mean, I use it pretty much every day. You can see you have all this data on valuation, growth. You get here on the summary tab, you just get access to all the news, financial reports that are coming out, earnings presentations, just all very easily very easily findable there. So great tool, definitely. So if you do want to check out Seeking Alpha, you can also click the link below, get 20% discount on that. Okay, so thanks for watching, and see you in the next one.